The Russell 2000 RUT.TOY briefly dipped into correction territory, down 10% from its March peak, 2 days after the Dow Jones Industrial Average. G and the S&P 500. SPX closed at record highs. And the divergence is uncommon. It has caused some to fear that a strong sell-off in large-cap stocks will follow, painting an all-around dire picture for equities. Some investors don't see it that way, though. They believe that improved economic growth and rising merger and acquisition activity should halt the decline in smaller-cap names. And growth in small-cap business is still intact, and they will continue to do well, said Gary Bradshaw, portfolio manager at Hodges Capital Management in Dallas. And large caps are flush with cash, and we think there's going to be a lot of acquisitions out of small caps. And a slide in small cap companies' stocks might be more related to valuation than any bigger signal on the economy or a sudden aversion to equities. The small caps had an outstanding run in 2013 that made them look vulnerable, and this past earnings period made that all too clear. And at the end of 2013, the difference between the forward price-to-earnings ratio on the Russell 2000 and the S&P 500 was near its highest going back to at least 1978, according to data from Citi. The Russell's forward P/E ratio was 24 then and the S&P 500's was 15.7. And now the Russell's forward P/E ratio is 21.5 and the S&P 500's is 15.3. That's still a substantial difference. And looking at earnings, large caps have performed better. Just 25% of S&P 500 components have missed expectations for per-share earnings in the first quarter. And by comparison, a Thomson Reuters index of nearly 2,000 companies in the small and mid-cap space showed 44% have missed earnings forecasts so far, according to Storman data. And the most pronounced divergence I am seeing this year relates to quality and consistency of earnings, said Brad Lipsig, senior portfolio manager at UBS Financial Services, speaking of small and large-cap stocks. And fear has been part of the equation as well. Investors have shied away from hyper-growth companies since February as biotechnology and internet stocks slumped. That drove flows away from the iShares Russell 2000 exchange-traded fund, IWM.B, which in turn pressured the underlying stocks. But the tide may be changing. Weekly inflows into the IMETF in the week ended Wednesday were the highest in dollar terms in 4 years, according to Lipper data. And if this does stabilize, we could see a turn, with small caps holding up better. Stephen DeSanctis, small cap strategist at Bank of America Merrill Lynch, told clients in the Friday Note. And Wall St. Week Ahead runs every Friday. Questions or comments on this column can be emailed to Rodrigo.Campos, @THOMSONREUTERS.com, and reporting by Rodrigo Campos, editing by Jan Paschal. And back to top. And Thomson Reuters is the world's largest international multimedia news agency, providing investing news, world news, business news, technology news, headline news, small business news, news alerts, personal finance, stock market, and mutual funds information available on Reuters.com, video, mobile, and interactive television platforms. Thomson Reuters journalists are subject to an editorial handbook which requires fair presentation and disclosure of relevant interests. And NYSE and Amex quotes delayed by at least 20 minutes. NASDAQ delayed by at least 15 minutes. For a complete list of exchanges and delays, please click